USD exposure in your TFSA could face volatility as US intervention lifts the yen to 157 per dollar. This is Modern Investing Techniques, episode 126. Quick reminder, everything we discuss here is for education and entertainment. The practice investment of the day uses simulated trades with no real money. I'm not a licensed financial advisor, and this isn't financial advice. Always do your own research before putting real money to work. The S&P 500 closed at 7,490, up 0.7%. The Nasdaq Composite closed at 25,374, up 1.0%. The TSX Composite closed at 35,226, down 0.8%. Tech led U.S. gains while Canadian materials and energy lagged. Earnings season continues with mixed results, including Tyson Foods missing estimates by 6 cents and Crystal Biotech falling 7% on a revenue miss. The Bank of Canada's next interest rate announcement is scheduled for December 9th, with markets pricing in steady policy. Remember the rate cycle we discussed yesterday. Today's yen move adds another layer to how global policy responses are rippling into currency markets. Portfolio benchmark data versus the Nasdaq is unavailable today. Currency intervention creates a concrete opportunity for Canadian investors to reassess FX exposure rather than treat the loonie as a passive background factor. When the US and Japan jointly support the yen, the move compresses the USD to the Pitpour pair from above 163 to 157. That shift directly affects the CAD-USD cross through commodity and trade linkages. The strategy here is explicit FX hedging inside registered accounts. Use low-cost USD CAD ETFs or forward contracts inside a TFSA to lock in rates when intervention signals appear. Implementation starts with checking your brokerage's FX conversion fees and setting alerts on the USD CAD pair at the 20-day moving average. This approach worked best during the 2022 rate hike cycle when sudden policy shifts produced 4 to 6% currency swings inside a single quarter. The risk is over-hedging and paying repeated rollover costs if the intervention proves short-lived. Canadian investors holding U.S. equities or ETFs in a TFSA or RRSP should calculate the exact markup their platform applies on CAD to USD conversions before the next volatility spike. Forward contracts available through interactive brokers or similar platforms allow locking in a rate for 30 or 90 days without selling the underlying holdings. Imagine you bought a U.S. equity ETF last week inside your TFSA when the yen intervention headlines hit. Your order filled at the posted NAV. But what actually happened is the brokerage converted your CAD at the prevailing spot rate plus a 1.5% markup before the trade even executed. The mechanism is straightforward. Most Canadian platforms apply the interbank rate plus a spread that widens from 0.3% in calm markets to 1.8% during volatility spikes like today's 4% yen move. Professionals always check the exact FX rate timestamp on the confirmation screen and compare it against the mid-market rate on a second platform before approving the trade. The concrete misconception to avoid is assuming your TFSA's US holdings are automatically insulated from currency moves because they sit in a tax-free wrapper. The one-sentence fix is to run a 30-second mid-market rate check on every USD purchase and set a price alert on USD CAD at the level where hedging becomes cheaper than the expected volatility. When the yen intervention drove USD cross JBY from above 163 down to 157, the CAD-USD cross moved in tandem because Canadian commodity exports and US trade flows create tight linkages between the two pairs. A 4% swing in the yen therefore translated into roughly 1.2 to 1.8% movement in USD CAD within the same trading session. Inside a TFSA, the tax-free status does not eliminate the conversion cost. The spread is paid at the moment of purchase and again on any future sale back to CAD. Investors who ignore the timestamp on their trade confirmation often discover the platform used a rate 80 to 120 pips worse than the mid-market print that appeared on financial websites at the exact same minute. Setting a simple alert on USD CAD at the 20-day moving average lets you decide in advance whether to convert early, hedge with a forward, or wait for the spread to compress. The same discipline applies to RRSP and FHSA accounts where larger USD positions are common. The dollar cost of an unhedged conversion on a $50,000 purchase can exceed $750 once the spread widens during geopolitical headlines. This is a simulated trade for educational purposes only. No real money is involved. Today's pick is LNTH, Lantheus Holdings, on the NASDAQ. The strategy is a catalyst-driven entry on an announced merger with Curium, creating scale in radiopharmaceuticals. The hold period runs Monday through Friday. The catalyst is a definitive merger agreement announced today with total consideration up to $8 billion, representing a 38% premium to Lantheus' 60-day volume-weighted average price. The technical setup shows the stock trading above its 50-day moving average on the daily chart with volume expected to exceed the 20-day average on deal confirmation. Risk assessment includes regulatory approval risk and integration costs that could pressure the name. The stop loss is set at 8% below entry. The target is plus 4% to plus 8% over the 5-day hold window. Confidence level is medium because merger premium and sector tailwinds align. But low-volume healthcare names have historically faded without sustained follow-through. This trade demonstrates how to quantify a merger catalyst using the exact premium and aggregate value disclosed in the announcement rather than headline hype. Listeners learn to size the position against the 8% stop before entry, so the risk is known in advance. The $8 billion aggregate value and 38% premium to the 60-day volume-weighted average price give a clear numerical benchmark for measuring whether the market has fully priced the transaction by Friday's close. No newly closed trade since the last review. The most recent practice investment has already been reviewed. Current holdings remain open and pending their scheduled evaluation. So there is no new realized result to report today. Interactive Brokers FX Trader lets Canadian investors execute USD CAD spot and forward trades inside registered accounts with 0.2 pip spreads and no commission on the first $100,000 equivalent monthly. It gives an edge by showing live interbank rates so you can compare against your current broker's markup before converting. Use it if you hold more than $25,000 exposure and want to hedge intervention-driven moves like today's yen action. Access it through an Interactive Brokers account with the FX Trader Mosaic interface. The platform also provides real-time volume data on the USD CAD pair, allowing users to time conversions when spreads are tightest during the London-New York overlap. Wealthsimple Trade Watchlist Alerts now supports custom price and percentage alerts on any TSX or NYSE symbol. With push notifications, it gives retail investors the same level of monitoring previously limited to Bloomberg terminals. Set alerts on merger names like LNTH at the 50-day moving average to catch volume spikes without staring at screens. Available to all Wealthsimple Trade users at no extra cost. The alert system also supports percentage change triggers, so investors can be notified the moment a position moves 3% or more on deal news. South African factory sentiment hits 7-month low. Escalating Middle East tensions are weighing on global manufacturing demand, with the gauge falling to its lowest level since January. The decline reflects concerns that higher energy costs and supply chain disruptions could reduce export orders for South African factories. Action is to trim emerging market equity exposure in non-registered accounts if the next PMI print misses expectations. UBS downgrades Stellantis on stalled U.S. turnaround. The broker cited weak North American demand and inventory build as reasons for the cut. Stellantis shares have underperformed the broader auto sector on concerns that U.S. dealer inventories remain elevated relative to sales velocity. Action is to avoid adding auto sector names until U.S. same-store sales data stabilize above consensus. WestJet flight attendants reached tentative agreement. The deal ends strike action and restores normal operations with improved duty premiums. The agreement introduces a duty period premium that recognizes more of the flight attendants' time on the ground. Action is to add airline exposure only after ratification vote results clear the final uncertainty. China signals more cautious approach to mining M&A. Beijing's rethink on a gold takeover reflects tighter risk tolerance for overseas deals. The recalibration follows an attempted takeover that was scaled back after regulatory review. Action is to hold existing precious metals positions, but wait for clearer regulatory signals before new entries. Portfolio performance data is unavailable in today's briefing, so no cumulative win rate or alpha figures can be reported. Open your brokerage app, pull up the USD CAD spot rate, and compare it to the mid-market rate on a free site. Note the exact spread on a $10,000 conversion and calculate the dollar cost. That single number is what you are paying for every unhedged US holding right now. Before we wrap, watch for how the yen move affects USD CAD spreads at the open tomorrow. That's modern investing techniques for today. If you found this useful, share it with a fellow investor and subscribe wherever you listen. Check the resources page for tools and platforms we discussed. We're back tomorrow. Keep learning, keep investing, and if you'd rather watch than listen, find us on YouTube at Nara Network. Links in the show notes. Quick tip from the network, try Tesla Shorts Time next. Your daily deep dive into everything Tesla. Every Nara Network show is free at naranetwork.com. Want the written briefing with source links? Each show keeps a summaries page on naranetwork.com. Scannable, dated, and free. This episode used AI voice synthesis of my voice. Editorial selection and analysis are my own.
Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous? Do you ever stay awake, counting sheep like all the time? What's your life like? What's your purpose? When's your birthday? What's your sign? Are you down right now? Are you stuck up in the past? Are you still thinking about all the times that you didn't laugh?